Good morning. I'm certainly not an expert in housing. I think that's really all of you. At RICS, we really do make an effort to work collaboratively with the Mayor's Office, City of London, but also across the rest of the UK. So we have regional teams that really do engage both on a policy perspective and trying to construct economically viable policies that will move the needle. Today, I've been asked to give a broad economic assessment as to what's going on in the macroeconomy and trying to fit the housing puzzle within all of that. We're definitely in interesting times. There's lots going on, lots of elections, probably a few more to come, who knows. Lots of ministers constantly changing. That isn't particularly useful from an economic perspective in terms of providing constancy through the cycle, and I'll address some of those challenges in my remarks today. But this is the broad, I'm not sure what that is. Okay. So I'm going to structure my comments and observations along these three key areas, and I underscore that they really are comments and observations because I don't think I have any of the answers, or I don't think there is a silver bullet to the myriad of challenges and problems that the housing market in the UK faces. And I think at this point it's really worth underscoring that housing issues challenge a number of countries around the world. So this isn't specific to the UK. Obviously we have our own unique problems here, but in many other countries, policymakers face similar challenges. And so I think that's worth bearing in mind, that we need to work collaboratively and learn from what's happening outside of this country as well. And I'll cite a couple of examples where I think it may be useful to look outside of what's happening in this country. So in terms of the broad picture of what's going on, you guys are all very familiar with these stated goals of, this comes from, the chart comes from the Barker Review, and it highlights sort of the band of the red and blue bands of where, if we want to bring house price growth down from where it is today into, something considered to be a bit more sustainable, we should be producing within the red and blue lines up there. Obviously, we're not, but we shouldn't be too pessimistic because we have sort of, there has been improvement over the past few years in terms of increasing the stock. And one of the biggest drivers of this was the change of use conversions that we've seen. But a couple of questions that I think is worth asking when we look at these types of goals and where we are in achieving them is that in the absence of big program of state-sponsored house building, who is going to build the homes that we need? And also, how are we going to build the new towns and major urban extensions that are needed? What type of approach are we going to be using? Will it be a hub and spoke structure where it's not necessarily dictated, but a lot of the messaging is coming from the center and then sort of the periphery sort of cities implement that plan, or is it going to be more locally driven? And we've sort of seen through the devolution conversations that we've had throughout the country that may be a more desirable plan. Maybe local authorities are better positioned to sort of understand the problems that face their communities and come up with not necessarily novel, but more fit-for-purpose solutions. Affordability, as a result, has become a constant phrase that we hear in the media, in conversations such as this one today. And as you can see, large swaths of the country are not particularly affordable. There's various measures you can use for affordability, but as you can just look from this shaded color, you would really have to live really up north to sort of be in somewhere where you could, where you would be exposed to a market that is affordable. So the questions I have for this particular issue is, can public policy redirect markets and alter how and where people want to live? We often hear that we should be building houses where people want to live, and that almost seems an unhelpful observation in the sense that we certainly don't want to be building homes where people don't want to live, but at the same time, we have experiences where we can build in places where people don't find it to necessarily be desirable initially, such as Milton Keynes, and we can build vibrant communities. And there were times in history where London wasn't necessarily considered a desirable place to live, but then it has become a desirable place. So I mean, there's a rich history, and we have to look back to history to see that it does work, where you don't necessarily have to build where demand is presently, but we can think innovatively and work to build thriving communities that people gravitate to rather than the other way around. We've also been successful in regenerating declining cities. And so examples of that would be, Manchester, Liverpool, Birmingham. These are now vibrant places where people want to live. And we should, rather than always banging on the drum of all the problems, we should also look to examples of where things have worked really well and that where we can regenerate and build thriving communities. There's also a need to distinguish between housing need and housing demand. Those are two very different concepts. And certainly we talk a lot about how demand has run ahead of supply fairly consistently over the past number of years. But when we talk about issues such as affordability, we need to be looking at the question of, okay, that is demand. People want bigger houses. People want to live closer to work. They want to live in more central areas. But what is, from a policy perspective, are we looking for solutions for demand, or are we looking more to shift the focus towards need? And how are we going to support those goals, and at what price? Because everything has a cost. We also need to look more carefully at things like housing taxes and subsidies, possibly thinking of introducing higher council tax bans, charging capital gains on main residences. Just things, if we're thinking of affordability, we need to also be willing to not hoard dreams, in the sense that home ownership isn't achievable by many large parts of society. And that if we are homeowners, or if we, whatever cross-section of society we live in, if we are truly interested in having affordable housing for everyone, then we do need to sort of ask ourselves, what are we willing to give up? Are we willing to have more zoning and planning introduced to allow multifamily homes, for example, within communities that predominantly have single-family homes? These are types of things that affect everyone's standard of living. And the cost, obviously, when we fail in addressing these issues properly, is an undersupply, poor quality, poorly located developments. So there is a cost to everything. And of course, there's the perennial issue of the green belt and how we use or how we improve the green belt to enhance the way we live. So in terms of coming off of the issue of affordability is inequality. And as you can see from this chart, the UK is a very unequal place to live. This is comparing against the other European Union countries, with the blue dots being the capital of a country, and the blue bars indicating the national average. And as you can see, I've circled the UK. There really is a huge disparity between the capital and the average. And that creates a lot of challenges, at least from a social perspective, in terms of providing housing. And it's something that we certainly need to consider. So the past year has certainly produced economic growth. In 2016, we had 2% plus GDP growth. That really took everyone by surprise. No one was really expecting it, especially given the referendum results. And of course, the first quarter, we've kind of, had a bit of a dip 0.2%. The outlook for the remainder of this year is fairly moderate growth, definitely coming down from last year. So we envisaged maybe something about 1.5% annual growth in 2017. But what's really been a driver of that growth has been the consumer. Certainly not business investment, given all the uncertainties that the economy faces. But consumers have just been on a spending binge, and that's included pretty much everything and anything, including housing. And this particular chart just shows that unsecured lending has really been running up. It's grown at an annual rate of 10.3%. And while unsecured net lending is only a seventh of the total amount compared to mortgage lending, default rates are 10 times higher. And so we have to think, when we're talking about issues at a more macro level like housing, how consumers' portfolios and finances are distributed and what the risks are when we look at sort of macro risks and systemic risks. And obviously, what happens to the consumer will also test resiliency of banks, and that's something that we have to be very cognizant of. And I'll touch on this point a bit later in terms of where policy rates are now and the risks that brings about. So moving on to just an assessment, a brief assessment of what's happening within the market. I'm going to move sort of in reverse chronology in the sense that I'll talk a bit about the medium-term outlook, and then I'll move to the near-term outlook with our survey results. We've had some really good insights from James regarding what's happening with government policy. We've had this huge thing that sort of landed on all of our desks. And I think it provides a really good framework. And if you haven't read it, I mean, it's over 100 pages. I think it's worth at least going through it, because I think it does, I think it's very easy to dismiss a lot of these types of reports that get, pumped out either from the private sector or from government as sort of being just a repeat of the same things. But as I started out in my comments, a lot of these issues aren't new, and we do need to work collaboratively. And the only way to do that is to kind of look to central guidance to see, okay, what is being proposed and how can we sort of help try to implement some of these things. And if we can't, or if we don't agree with certain things that are outlined in official policy, then how can we positively contribute to reshaping those proposals? So from our perspective at RICS, we sort of look at the housing white paper in 6 dimensions, and I thought I would just briefly go through these. First is looking at funding as a broad category and how the housing market has evolved over, say, the past 10 years. As you can see, since the global financial crisis, the composition of home building and developing has shifted fairly dramatically. The footprint of SMEs has really just shrunk to less than half. And they have really bore the brunt of the recession, and their output still falls far short of pre-recession levels. There is support in the pipeline for SMEs, and the housing white paper sort of underscored that the home building fund, which has $3 billion, will help SMEs challenge major developers. So hopefully this can sort of be less skewed and kind of get rebalanced again, so that SMEs do play more of a pivotal role in the agenda. There's also the need to make sure that we're not just building things in isolation, but that things are being connected, and that's where infrastructure really matters. Communities in isolation don't work, and it creates a lot of dysfunction within the greater community, because people live in certain places, they have jobs in certain places, and if the infrastructure is poor in connecting those two bits, then it becomes, it creates a whole host of problems. To say the least, it also introduces health problems, which we don't often think about when we think about housing. When people are doing 3-4 hour commutes, that certainly has an impact on people's mental and emotional wherewithal. And so those types of elements we have to think about, not just the economic and political ones. And we have the 2.3 billion that's earmarked through the Housing Infrastructure Fund that hopefully should help put the right infrastructure in the right place at the right time. And finally, help for first-time buyers. It's there. You have the lifetime ISAs. You have Help to Buy equity loan scheme that runs to the end of this decade, 2020. You have the Starter Homes initiative that hopefully at some point will come to life. So these types of programs can help, and we are seeing it. And of course, with all of these types of programs, the net impact, it's sort of like a kaleidoscope. You can, depending on how you turn the lens and what data you look at, you could make a case arguing either side of whether something is successful or it isn't. But the point is, rather than just dismissing these schemes, we really have to work as an industry and as a profession if we're going to challenge a policy or scheme, then we have to push back and say, well, instead of this, I propose this instead, rather than just saying, well, this isn't working, and then just leaving the table. That type of discourse isn't particularly useful. The second major area is land and planning, and that has been a perennial challenge, as this chart shows. The pace of development is definitely something that we need to be. To be fair, I think we're very vigilant as a society that the pace of development just isn't sufficient. More than a third of new homes that were granted planning permissioning between 2010 and 2011, and the latest year, 2015, 2016, have yet to be built. And so it's not just an issue of getting more planners to permission things. The challenge is largely also making sure that we build. I think proposals to reduce the time period between permissioning and actual building from 3 to 2 years is very useful. And trying to discourage land banking through greater transparency in home ownership, in land ownership and availability can also help move the needle. And when we're talking about land and planning, you can't not talk about sort of population densities. As this chart shows, London isn't a particularly dense city compared to some of its European peers. And when you compare it to other financial centers, such as New York or Tokyo, London really is not dense at all. And so there is potential in terms of not just land, but we could build vertically upwards that could help resolve some of the challenges that we have. And we need to make sure that this type of higher density building, should we choose more of it, is linked up with the requisite infrastructure, such as public transportation, so that it works. You can't just have higher densities and then sort of leave infrastructure as an afterthought. The two go hand in hand. And when you only look at one side of the equation and not the other, that's where then things don't work. And then people say, well, that type of high density building doesn't work. It may not have worked because you didn't have the necessary infrastructure in place. And as with all things, we need to ensure that the density and form of development reflects the character, accessibility, and infrastructure capacity of an area. And so we can't just be looking at things just by the numbers. We really do need to consider placemaking, communities, and that's very important. The third area of the 6 areas that we feel are very valuable from the white paper is the public sector and its role. This is a very busy chart, I know, but it sort of shows the chronology, although, quite some time back. But I've sort of flagged 3 points that I thought were very interesting with the red triangles. There certainly was a push for public house building just after the war, and then that's when you see these blue bars really just appearing in the middle part of the chart. But then public expenditure for housing was cut in the late 70s, in 79. And then 10 years later, funding shifted in a very dramatic way from local authorities to housing associations. And that's when the blue bars basically disappeared. But then the beige colored bars didn't sort of make up the difference. And so from a public sector perspective, we do need to ensure that government releases land quicker and on a greater scale. We also need to be helping councils develop their community plans as 40% of councils don't have an up-to-date plan that meets the projected growth of households in their area. And this comes back to the hub versus spokes system. So if local communities aren't going to come up with their own plans, then it will be then defaulting back to the central government that dictates. And the central government may not necessarily appreciate the local nuances of a given region. And so there is a need to sort of work with councils to have plans that address the needs of their community so that homes are developed in areas where those local residents actually want them. Equally important is assisting local authorities to hold developers to account if they fail to deliver. And if you take that one step forward, we need to implement housing delivery tests to hold the local authorities to account as well. So it's not just saying developers need to be litmus tested, but it's also the local authorities need to be held to account if at the end of the sausage machine, the product doesn't taste very good. So there definitely needs to be more accountability. And we need to revisit the NPPF at some point to make it clear that plans and individual development proposals use land efficiently. The fourth area is the rented sector. And there's definitely been a shift of emphasis from home ownership to supplying across all tenures in the past government, with the main aim being to promote aggregate supply. And we hope that that continues, that the messaging continues. We have a new housing minister, but we do hope that the ethos of focusing to not just home ownership, which is really what the past government was banging on, but that we look across all tenures is really, really important. And I can't underscore that enough. And this chart shows, it's nothing really earth-shattering in the sense that it just shows that as you become more settled within this country, you prefer home ownership. And so there is certainly a need to make sure that people who want to rent can rent, and that we don't push people into thinking that home ownership is actually a good thing for everyone, and that it's a natural step at certain age points that you should be owning a home, or if you don't, that you're a failure. I think that type of mentality really needs to change in a fundamental way. We also need to target an investment for build to rent and relax the Affordable Homes Program from shared ownership to include affordable rent. So again, looking across all tenures and across all spectrums. The fifth area is that of modern methods of construction, building things in different ways. If the way we're building now isn't good, then we need to look for alternatives. House building methods in the UK have barely changed in the last 100 years, but there are different ways of doing it. There's modular construction, that's prefabricated out in factories. Other countries do it really well, case in point, Japan. We can't always just look at our belly buttons and sort of say, okay, well, we're a small country and we have highly dense urban areas and infrastructure is a bit of a challenge of bringing these big chunky things into places like London or wherever, and as a result that's why we're not doing a lot more of it. Japan has a shrinking population, it has an aging population, it has far less immigration, and yet it's able to produce a lot more new homes than here in the UK, and by a multiple. So we're not just talking about 20%, but we're talking about more than double. So we need to look at other countries rather than just looking inward and saying, okay, well, what have we done in the past, and how can we tweak what we've done in the past? We should try to learn from other countries and try to find parallels with countries that have similar challenges and similar constructs in terms of their economy and their population and their needs, and try to make a good effort in replicating some of the success stories. Another challenge here is that major builders rely a lot on subcontracting, which pushes innovation and risk down the supply chain to those least able to respond. And so from a macro perspective, that creates, it can create bottlenecks if it's just major builders, kind of sort of what the other chart was showing. So we need to come to more of a rebalancing. of how these new homes are built. And of course, you have funding in the pipeline. You have the Accelerated Construction Fund and the Home Builders Fund. So they're not huge amounts, but there are funding there that can support and hopefully expand some of these new ways of building. And last but not least on this subject, we need to join up lenders, valuers, and industry to increase availability of mortgages and make sure that those products are mortgageable. So you can't just create the product, but you sort of need to look along the whole life cycle and make sure that these things are things that actually banks will support. And the last point I would like to touch on regarding the white paper is the area of skills. We talk a lot about this. We also talk a lot about it at RICS in our construction and infrastructure work streams that directly affect the housing market. And this has been a persistent problem, and it's not something that's just appeared over the past couple of years. As this chart shows, we have a series that goes all the way back to 1998. And I'll delve a bit more about our survey just after this. But we are making progress. The Chancellor has announced in the past spring budget sort of a restructuring of how the profession is structured. And so in the autumn of 2019, there'll be an introduction of this thing called T-levels. And basically the goal of that is to streamline the more than 13,000 vocational and technical qualifications that businesses certainly can't understand what all of these qualifications mean, and trying to streamline that into 15 focused routes into professions such as construction. So really trying to quiet the noise and make it easier for businesses to understand what kind of credentialing is coming out of the educational and training system. And that will launch in 2019. We also need to work with existing bodies such as the Construction Leadership Council to encourage industry on issues such as retention and training. So it can't just be the new pipeline and new talent, but we also want to make sure that professionals within the industry are retained and that they're trained so that they find a meaningful existence within the profession throughout the cycle and not just when times are good. And this is just a very quick chart just to show the number of apprenticeships that are currently sort of being rolled out. It's not also it's worth bearing in mind that when we talk with businesses, they do tell us that it's not just a lack of quantity, that it's more the quality of apprentices that are coming out of vocational training programs and through apprenticeship schemes that is insufficient. And so while the apprenticeship levy that was put in place in April is very important in providing additional funding for training, we don't want to be misled into thinking that more of something that businesses don't necessarily want is going to be a good thing and that that's going to solve the problems. We need to make sure that we work collaboratively with vocational training and with technical colleges to make sure that the curriculum that's being taught is actually teaching the skills that businesses find useful. So in sum, we need less scapegoating, and we need more long-term thinking. We need good ideas, and most importantly, we need to be working collaboratively together, both within industry, across industry and government, and obviously working with communities to make sure that solutions that are proposed are sort of fit for purpose and things that people actually want within their communities, and not just making assumptions that it's what people want. The spring budget sort of outlined, I'm not going to go into the spring budget, but it did focus, it had an element focusing on a bit more targeting near-term fiscal spending, focused on short-term infrastructure spending that could see more immediate impacts on the business cycle. Things like repair and maintenance. And while they're certainly not the flashy type of big projects that that businesses or that normally hit the front page of the newspapers, there's certainly things that link up and make connecting communities more successful. And I think that is something that hopefully in the autumn budget we'll see more clarification as to if there's going to be less fiscal austerity, to what extent, and how the infrastructure element of it will be affected. In terms of our market surveys, we do a monthly market survey, as all of you are aware. We really do appreciate, for those of you who do contribute to them, we appreciate your time. We greatly appreciate the insights that you provide, because while I'm up here standing talking about what the results are, it's really all of you that sort of input into it. And so without that input, without that insight, we really have nothing to share. And so I encourage you to continue contributing if you do, and if you don't, please let me know, and I'll definitely link you up with the survey that we put out each month. It's worth noting that as a profession, our market surveys are tracked regularly by policy-making bodies such as the Bank of England and the Treasury Department, and even globally, the International Monetary Fund, the European Commission, the World Economic Forum. All of these bodies, we are actively engaged in collaborating with them. So we're not just a professional body that is, bean counting sort of, and then putting things out in the local media. We really are trying our best to collaborate with a broader audience, and the feedback has been very positive. And they definitely look at what surveyors in the field are saying, what estate agents are saying. So it's very important that we sort of have your feedback. So the general takeaway of where we are today, based on the market insights we've been gaining from the survey, is that conditions are fairly lackluster. Inquiries, instructions, and sales have all been declining. And price and rents have really been underpinned by supply constraints. So that's basically what it is in a nutshell. But we do expect transaction activities to stabilize this year, and I will go a little bit into some detail as to some of these dynamics. As this chart shows, price growth definitely appears to be losing momentum. Our series has a really good, this isn't just to toot our own horn, but the chart does show that our house price series is a very good leading indicator of what the official data comes out with. And so there is merit to what all of you are inputting and how we sort of track what's happening with prices. And most recently, the latest data point is the softest reading since August of last year. So there's definitely been a loss of momentum. Obviously, there's differentiation between what's happening in London versus the periphery. Elsewhere, prices continue to rise, but London has, primarily from a cyclical story, it's far more advanced in the cycle, and as a result, prices have sort of fallen off. And this chart shows that, that what I just said about London being more downbeat. What we're hearing from our members in the field is that owner-occupiers have, to some extent, tired of waiting for Brexit, so are slowly starting to proceed with purchases irrespective, because at some point, you can only wait for so long, and this Brexit thing, there's not any more certainty today than there was when, 6 months ago or even a year ago. And so people are starting to move, at least owner-occupiers are starting to tire of waiting. So there is some activity on that front. But one of the big themes that have been brought up time and again by all of you is the impact of the stamp duty land tax that was introduced last year on higher priced homes and second homes and buy-to-let. And that has really had a slowing effect that has continued to persist and weighed activity. And when you compound that with where we are in the cycle, that only sort of weighs the mood even further. But in terms of expectations, at least based on our price expectation series, things aren't looking so great. Of course, it's sort of, these are all done on a net balance basis, so they sort of measure the breadth and not the depth of responses that we're hearing. But the takeaway from this chart is that the slowdown isn't going to improve anytime soon, and that there actually may be further downside to come. The lack of supply remains a key issue, with stocks at an all-time low, and this is a theme that has continued to persist for at least the past few years. Sales instructions were the most negative in the most recent read since the middle of last year. And the general election certainly did exacerbate the stamp duty land tax effect that was already in the pipeline. But hopefully, it's hard to make an assessment as to whether the results of the general election actually helped or will further hinder uncertainty. We're certainly in sort of like a gray zone, and there still is a lot of uncertainty, so maybe this trend will continue and persist for some time further. But of course, there really has been a lack of yield elsewhere in terms of other financial assets, and so we would expect that in times of uncertainty, high uncertainty, that people, if they don't need to liquidate their asset, would sort of sit on their hands, and that's what we're hearing from our agents in the field. So, just to very quickly conclude in terms of there's lots in the survey, and we certainly encourage you to visit it online. Just very quickly in terms of the key risks, if I may, cheap liquidity is certainly an issue, with the Bank of England having rates very low for a very long period of time. And it's been 10 years since the last UK rate increase, and that has definitely had repercussions on an asset class like property. And that has led to obviously over-leveraged households, which I've talked about, and that creates skew within the marketplace. And this feeds back into this loop of where if we were to have an adverse impact with inflation rearing its head sooner and quicker than expected, then policy rates would need to respond by having a much more accelerated path. And that could, in turn, lead to expectations of further price reductions and fire sales, which could meaningfully impact the industry as a whole. The Bank of England has had, rules for liftoff. Right now, we're just sort of hinging on domestic cost pressures. And in terms of, this was sort of a chart that I had shown a year ago in terms of where people thought policy rates would be. And as you can see, a lot of people, this was a survey of professional economists, and as you can see, we were very wrong. Only 20% of people thought that there wouldn't be any tightening, and the reality is that if the BOE has underestimated the impact of inflation, that there's going to have to be a fairly significant ratcheting up to catch up, and that will make paying off household debt very hard if this acceleration in tightening happens quickly. And in terms of Brexit, that is something that we need to really contemplate, and it's not something for this conversation, but we really need to think about what our relationship with the EU will be. And sorry, I'm just trying to go through some of these slides to give you a flavor so that in the rest of this event, you have a sense of where London is. And this slide just shows a composite. This is based on research done by Grosvenor, that the continental cities in Europe, while their share of the pie may increase in terms of where businesses decide to be and the desirability of place to live is, that the London's absolute share is still probably going to be much larger. And so that's something that is worth keeping in mind. And last but not least, is where do we go from here? We need to bring it all together, right? And so next month we'll be launching, RICS is a founding partner in a new housing evidence center that all of you may have heard of in some iteration over the past few years. Well, it's finally come to life. There's £6 million pounds in funding from the ESRC that will fund the center for 5 years. And we think it's really a good opportunity for the industry and policymakers, businesses, everyone to come together in a multidisciplinary effort to move the conversation forward. Really a lot of collaboration, workshops to get to a consensus as to what some of the solutions could be, and then trying to work to implement it. And so these are the core themes. There's going to be 5 hubs across the country in places like Sheffield, Glasgow, Wales, London. So we do encourage you to be involved with the Housing Evidence Center, be certainly involved with RICS. Feel free to reach out with us. We're always interested in hearing your thoughts, and thank you very much for your time today.